Hey everyone, this is Kirk here again at Option Alpha, and what I want to do on the video tonight is go over two things really important here tonight. It's February 23rd. The market obviously had a very bad day again today, Wednesday, following on the heels of the long weekend, all the issues that are going on in Libya and across the Middle East with oil. So I do want to get to those, but I did want to cover real quickly as we get into tonight's video what a great month we really had for the February portfolio. And I think it's important for everyone to just take a minute and watch this because I'm going to go through kind of what our strategy has been for February for all three of our different option strategies that we do offer here. So again, it was a very good month for all three. All three were profitable. We didn't close out any losing trades. We didn't close out any trades early. And in the wake of this market just continuing to rally right up until expiration, I thought it was a really good month for us overall. So you can see the credit spread strategy here had a return of 9.49, very, very solid return. Great premiums and great profits on some of these trades. You can see the call spread got a little bit close, but that's the risk that we were kind of willing to take to get this nice 16% return here on the RUT. If we go down the naked puts and calls, as always, the bread and butter strategy that we have here for a long time now. It's been over a year and a half since we've had any sort of losing trade or trade closed out early on this. This is just a strategy that makes sense. It does require a little bit more margin. You can see that the margin is a little bit higher and the returns aren't always as glamorous as some of the other strategies. But this continues to be a very bread and butter strategy for us. I think what's really interesting about last month is that we didn't realize it until halfway into the month when we were building the portfolio, but we had all puts for the month of February, and it actually turned out to work out really good in our favor because as the market rallies away from our short puts, those short puts expire sooner and decay sooner, so the premium is there and you just get to keep it in your account for the rest of the month there. So really good strategy. For the Iron Condors, it was a little bit different. The Iron Condors, we only were able to fit in one complete condor for the month. It still was a great return, about over 11% return on the one condor. These are a little bit more complex, obviously, these condors, because you're entering both sides of the market. And really the only reason we had one trade for the month of February is because the VIX was so low when we were making these trades, and the market just continued to inch higher. And with the VIX being low, we actually had to come in a little bit closer. So we didn't want to over trade ourselves and trade too much on the Iron Condors this month. I thought it was a really good trade. End up working out perfectly for that strategy. I think that next month we already have one Iron Condor already on the books for March. And I think we'll possibly add another one here later on this week or next week as we start to see some of this volatility shake out. Okay, so now I think I definitely wanted to cover real quickly tonight some of the things that I thought were pretty important going forward. I mean, we obviously know that all the issues that are happening in Libya and beyond have had a dramatic impact on oil. Oil was trading at just below $90 on Friday last week, and now it's hit $100 a barrel seemingly overnight. I don't think that that's the end of it. I'm hoping that it will calm down just a little bit in oil because the margin is all whacked out on oil. For those of you who trade the oil futures, you know that. But I'm hoping it'll calm down a little bit. I really don't think that we're going to see any substantial sell-off in oil. I think that everything in the Middle East is going to continue to escalate. I mean, of course, I could be wrong, but I'd rather be safe than sorry and just play a very defensive strategy in oil, whatever oil trades you do have. Here's a look at the USO. I think it's pretty important to note on the USO here that we have decisively broken above this recent trading range here, and you can see that the volume, and I'll just increase it here, you can see the volume is almost twice as much as what it was last Friday. So we're definitely in that breakout stage. Now, whether we break out and come back and retrace, that's something to be seen later on, obviously, but I think that we're definitely still in that breakout stage. The last thing I want to take a look at tonight here was actually a quick look at the RUT, and this is the Russell. I think it's pretty funny that this happened, and still in the midst of this whole thing, I guess people, really thought that the market was going to continue higher, just marching higher. Every bad news story that came out, the market just shrugged it off and continued to march higher. But this is an intraday look at the Russell. It's a 60-day look at the last, every candlestick here is 5 minutes. So really going back from the beginning or the late end of January here, the 31st of January, all the way till now in February. And you can see that the Russell just marched right along this trend line, very steady, very consistent. But as we know with all trading strategies, the more it hits this trend line and the more consistent it seems, and the more, I guess, dumb, it seems like it's an easy trade because it just keeps hitting this, this support line and this trend line just rising higher, then obviously that creates more problems. That's exactly when the market is going to turn over, when everyone just blindly assumes that the market's going to go higher. And that's what you've seen in the Russell. The Russell's taken a pretty big hit here. You can see that in 2 days, just 2 single days, on Tuesday here and on Wednesday today, that in 2 days we have virtually erased almost a month's worth of profit. We're all the way back in the beginning of February, so all that slight and slow marching higher for the bulls completely erased in 2 trading sessions. And I'm sure some of you got caught with your tail between your legs without any stop losses on some of these trades. So I think going forward, if we start to see a little bit more consolidation, hopefully this week, I'm not sure how much selling pressure we're going to see, but hopefully we'll start to see a little bit more consolidation, and then possibly, at least on the Russell, a run back up near the 820 area. That seems to be a pretty good area of support resistance. So the Russell may run back up there, and then after that, it's obviously anybody's game. We could continue higher or then resume the downtrend. So always touch base with us, check back in with us, and we'll keep you guys informed as always. Happy trading.